I would like to start there because, this time is different is about how it really wasn't. And then the long recovery from the crisis you predicted is certainly came true. Recessions, 10-year expansion. Recessions don't usually, something has to push you into recession, right? Fed hiking too much, well, that's not going to happen now. But a shock. Are you worried about shocks in the system right now that the Fed should be worried about?
Of course. I think one of the things that is setting this period apart is the incidence of shocks. We've had all the trade tensions, which everybody talks about. But one shock that is concerning me a great deal at the moment is the turmoil in Hong Kong. The turmoil in Hong Kong, I think, has quite possible consequences for growth in Asia, growth in China. These are not segmented regional effects. These have really global consequences. So what could be a tipping point that could trigger a very significant global slowdown, even a recession? That would be a candidate. That could be a candidate.
How would you see that playing out? Would it just be that Hong Kong is unseated or unsettled as a financial center? Would it have something to do with the Chinese government taking aggressive action against the citizens of Hong Kong? What would cause the shock from Hong Kong to be so severe?
Well, look, I think you could have shocks that are with a bang or with a whisper. The bang part is there's an event with China. It's dramatic, the impact on the region, the capital flight, weakness on the renminbi. That's the drama part. But the less dramatic part, but nonetheless very real, is already taking a situation that was weaker, where we had seen a slowdown of significant proportions, and just making it worse. So, as I said, tipping points don't always need, big drama.
Slowdowns. China. How do you gauge the extent of their slowdown right now and the effectiveness of the stimulus they've done so far, and how much more they're going to do, particularly if this next wave of tariffs hits on September 1st?
Well, look, the slowdown has already had major ripple effects on the world economy. We've seen it in commodity markets. We've seen it in very significant slowdown in Asian economies, in Latin American economies that are commodity exporters. So the global repercussions of China's slowdown we have already felt. And I think if you look at the FOMC minutes, you see concerns among some of the members saying, well, the global situation, part of that, of course, is simply put, the U.S. trade China war, and now more recently, the currency war. But part of that is, I think, concerns that the global economy had been slowing pretty much across the board. Europe, China, EMs, and so on.
Currency war. I just asked Adrian Orr, who's governor of the Reserve Bank of New Zealand, but people cutting rates to stimulate their economy because of a trade war, et cetera, but then people immediately saying, it's a currency war. But do you think, or do we have the early days of something that will become that?
Well, look, I think, I was at last month at the Bank of France conference celebrating 75 years of Bretton Woods. Chairman Powell was there. Many of the attendees here were there. And there was talk of, exchange rate stability and Bretton Woods and so on. In those days, it was done explicitly. You intervened to stabilize the exchange rate. Now central banks do interest rates. But we're still seeing big efforts that are geared towards avoiding appreciations. One of the big concerns right now that, lends credence to the potential of a currency war is who wants to appreciate. Nobody wants their currency to appreciate. What is the result? You lower interest rates. So central banks have been moving in packs, so to speak. because standing out, allowing your rates to be significantly higher, immediately has implications for an appreciated currency. Nobody wants an appreciated currency. Nobody wants a current account deficit. I think it's somewhat ironic that at this moment we are seeing the more vivid accusations of China's currency being manipulated, because in effect, China's been coping with capital outflows for some time now, which tend to depreciate the currency. When you can really have made the case for more manipulation was years back when the double growth, double-digit growth, capital inflows, big tendency to appreciate, and they were fighting that tooth and nail. I think it's ironic that it's surfacing now.
Actually, they open up their currency and let it move more freely. When it weakens, everyone says, "Oh, you're manipulating your currency."
But I would highlight that one big difference from just any country's currency weakening, China's currency weakening, and this goes back to the Hong Kong issue, is that it has big repercussions for emerging markets, because emerging markets also that are competing with China do not want their currency to appreciate versus the renminbi. But yes, it's somewhat ironic that we're seeing this accusations now.
Bring back to Jackson Hole, this conference, Jay Powell's speech to open the conference Friday morning. Is the Fed on the sidelines in all this? Does the Fed matter to this? If it cuts rates or it doesn't cut rates in September, does the Fed have a key role in all of that?
What the Fed does is always a really critical point in the global economy. If you go back through history and even right through the present, Federal Reserve interest rate cycles have really outsized effects globally. And if the Fed were not lowering interest rates right now, I don't think we would have seen the spate of other central banks lowering rates. So it really sets global interest rates. I think the big question that everyone is waiting for is to sort out the question, is this the beginning of a rate cycle, long decline in rates, or is it we're going to do a little bit here and wait and see how things pan out, which is my interpretation thus far.
What will they do? Will they cut in September? Will they be doing more? What should they do in your view?
Well, what they will do and should do may not be always the same thing. I think that, let me start with what I think they will do. I think is what markets expect. I think there's another cut. But then, there is certainly no unanimity of views within the FOMC voting members. If you look at the minutes, it was agreed to cut, but for different reasons. So it's not like you have this really homogeneous view. We are at a point where there's a lot of uncertainty. But to finish the point, I think a September cut is the most likely outcome, and then a wait and see. Let's look if manufacturing picks up. Let's look at how global events shape up, the trade issue, and all the other concerns about, European slowdown and so on.